Hey, Tim Knight, and we're going to walk through kind of what just happened, kind of a fresh look by way of not slope charts, but these intraday futures charts, and we'll dial it back to different periods of time. But I want to start with a little, not rant, but a little speech. So here's the RTY for pretty much the cash trading day. And as you can see, the moment the cash market opened, for no particular reason, it exploded higher to its high of the day. So it went from its low of the day to the high of the day within minutes, for no particular reason. And then went banging around all through the day and got stronger and stronger, and then for no particular reason fell. So tons of smoke, zero fire. And this is the rant part. I realize that in this day and age, that, and especially if you look at Zero Hedge, and they gave me a premium membership there, so I get to like dig down into all the premium stuff, and they have deep information about like spot gamma this and JP Morgan collar that, and I'm not smart enough to figure all that stuff out or even understand that stuff. My eyes just glaze over, and I've tried. God knows I've tried. It makes zero sense to me. Now, if I were a trader in an investment bank, or if I was a day trader, it would be incumbent upon me to understand it, difficult or not. I'm not any of those things, and I don't want to understand it. I'm not a day trader. I'm a good classic chartist, old-fashioned, longer-term swing trader. But it is really irksome that fundamentals in the economy don't even enter into the conversation. It's just crazy stuff about how JP Morgan has constructed, this options trade, and that dictates the entire global equity market. I don't get it. I don't like it, and it's just a damn shame. But I suppose that's why, for example, the mere fact that the bell goes ding, 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 ding is enough to make the future surge like this. Big eye roll. Dialing back away from this minute by minute stuff, however, things get a little more clear. This is the 4-hour bars, and to my eyes, this still has the potential of being a marvelous topping pattern. It is far from done. As we're kind of constructing this, the relevant items, and as we're on the RTY still, the relevant items are these very simple lines here. So we've got the topping pattern above this purple line, and we've got the support down here. And we fell steadily, and then today we went rocketing higher, and we didn't get quite back up to this level, and then we weakened a bit. So it goes without saying that we have to break and stay below this red line here in order to make a baby step toward penetrating this area. There's a tremendous amount of support down here because of all this ownership. You can see how all this ownership at these price levels needs to be conquered before we have any kind of chance of this pattern here, specifically that, meaning anything. Because if we can manage to get below it, first of all, it reintroduces us to the same kind of levels we saw in mid-June and we saw in mid-October of last year, and sets us up to get down to the cool stuff down in this area, like so. But short term, they are fighting like hell to keep this thing propped up. So that's the RTY. And that, by the way, to my eyes, is the cleanest, ugly as it is, that's the cleanest one of all. We look at the ES, and there's nothing bearish about this. It has been steadily pushing higher ever since the billionaire banker bailout. Sure, we get some little wobbles here and there, but on the whole, as you can plainly see, this just strength beginning strength. There was the bottom right there. That's where the billionaire bailout was, where the scumbags in the federal government just basically threw all the rules away, all the rules, to help their buddies out. And it's been exploding higher ever since, even so much so that it got above the tippity top that was established back in August. So the likes of the ES, this is a big, fat, frickin' mess. It's defied the Fibonacci resistance. It's defied any clean pattern. It has basically been in a unmitigated uptrend ever since the aforementioned bailout. The only hope I have on this is if the Fed spread is still working, then we are a good 500 points too expensive right now, based on simple Fed liquidity. Whether that's true or not remains to be seen. One little bitty bright spot for the bears out there is NVIDIA finally started seeing some selling, as you can see. This is one of the probably top 3 most important stocks in terms of the psychology of the market. In fact, glancing at this just now, I just noticed a pretty interesting top on this as well. Now, this is not my product, so I'm not as adept as I am in slope charts, but yeah, you can see right there, pretty interesting little reversal on that on the 30-minute bar. But as you can see, ever since mid-October, this thing has been brutal in its ascent. But as far as the NQ in general goes, same stories with the ES. I could call it a mess, but I could also call it unrepentantly bullish. You can see here that there's just, it's classic. Higher lows, higher highs. Even I cannot deny that is an uptrend. It's the very definition of an uptrend. And it's funny too, because yes, the bottom was October 13th, but in a way, you would have been perfectly fine waiting until the new year began, because the year 2023 has been magical for tech stocks, just like the year 1999 was. And, now and then it seems to catch its breath, but by no means can I point to a chart like this and say, we gotcha. It's all over now, baby. By no means. Today could be the bottom for the next month, as far as I know. So I'm staying very focused on individual positions. So I'll just close by saying that presently I have 14 positions, pretty much all committed. I'm pretty much out of buying power, but 14 positions, 13 of which are individual equities, many of them related to finance, and one and only one is an ETF, IWM, because as I said earlier, the small caps is the only pattern that I like. It's the only one I can have any clarity on. So that's kind of where it's at. 14 positions, 13 are equity based. All of those January 2024 puts. And the IWM more aggressive time-wise, those are September 15 puts. So that has only 81 days, whereas the others have 207 days. In other words, all the time in the world. So that's where I'm at. And of course, this week wraps up the first half of this dreadful year. And we'll have because of yet another federal holiday, we'll have a shortened week next week. And then life can be normal for a while. That's it. See you later.